Welcome back to Markets and Macros. Markets not moved much, but macros are getting into a slightly tight spot. A person who can analyze them very well would be Roopa Kudva, CEO of Crisil. That company has analyzed the debt balance sheets of about 10,000 companies, we understand. Roopa joins us from the sidelines of the Motilal Oswal Investor Conference. Roopa, thanks much for joining us today. Well, how do you see the corporate debt scenario in panning out? You know, in Q1, we had most banks reporting higher NPLs. And now it appears that the downturn, which we thought would be brief, will be a 5% tick in terms of GDP growth for maybe the rest of the year. So do you see the corporate debt default rate getting much worse?
We have just revised our GDP growth forecast for 2012-13 and brought it down to 5.5%. So yes, a clearly lower growth scenario compared to what we have seen in the last 2 years. And that will indeed have an impact on pressures on corporate credit quality and therefore to upgrades and downgrades, and also to the quantum and nature of restructured assets. Let me take them one by one. If you look at upgrades to downgrades or the rating action ratio, for the last 4 quarters, it has steadily declined from the level of 1 and reached a level of 0.97 in the latest quarter. What does this mean? This essentially means that Crisil, out of its portfolio of 10,100 companies that we rate, in that portfolio, we are downgrading more companies than we are upgrading. This is a trend that we certainly expect to continue and even worsen over the next 2 quarters. So 0.97 will certainly go down further. How much further, it's not possible to say at this point, but certainly we do not expect it to go to the all-time low levels that we saw in the late 1990s of 0.67%. Concomitantly, defaults of companies have also risen. If you look at FY 11 and 12, 3.4% of our portfolio defaulted, which was a 10-year high. So we had 188 companies defaulting. What are some of the common things that we are seeing amongst the downgraded companies and the defaulting companies? What is the key reason for the downgrades? Now, if you analyze it sectorally, there is no clear sectoral trend that emerges for the downgrades. However, 56% of our downgrades, Lata, are caused because of liquidity reasons. So that is inability to raise enough money to meet repayment obligations coming out of either increased working capital requirements or capex funding requirements. The key thing, therefore, for us to watch out for is what is the refinancing ability of companies going to be going forward.
Okay, Mrs. Kudva, just wanted to actually concentrate on the issue of bad loans then. What I mean is, do you see an exponential growth in NPAs, especially in the infrastructure sector, especially if some corrective steps are not taken right away?
That's a great question, which actually brings us to the second part of what you started talking about, which was restructured assets. Restructured assets is a very interesting story and qualitatively very different from the restructuring that we saw in the post-Lehman time. You know, post-Lehman, we saw restructured assets to the tune of about 1.3 trillion rupees. And I think the bulk of those restructured assets were small accounts. Right? Our last estimates of restructured assets was 2.2 trillion. We are shortly going to release our new estimate of restructured assets, which is going up to 3.2 trillion rupees over 2012 and 2013. And the bulk of these restructured assets are large ticket loans with a loan size of 1,000 crores plus. So very different from what we saw last time. And the difference is coming because of the composition of the restructured assets. You're absolutely right. A large majority of them are in sectors like power. They are in sectors like aviation. They are in sectors like construction and infrastructure, which are going to account for a significant proportion of the new number that we are going to publish shortly, which is estimates it to the tune of 3 to 3.2 trillion rupees. The exact number is being finalized as we speak.
Okay. Mrs. Kudva, the other point is that you said liquidity is an issue at this point in time. So would you say that if in case the rate cut cycle does start, downgrades may decline rapidly then?
Well, Lata, you know, there are huge issues with respect to the speed of transmission of monetary policy. You know, between the time a rate increase or a rate cut happens and the time it actually transmits into the system in terms of lowering of overall interest rates and borrowing costs, there is always a lag. So in general, it would be beneficial, but I don't think it will have immediate and dramatic impact.
Okay, Roopa, you compared this downturn to the late 90s and you said things look a little better, don't look as bad as the late 90s. Can you elaborate on that comparison further? In what ways is the situation better, and is it worse than the 90s in any particular way?
I think qualitatively, corporate India has come a long way since the late 90s, Lata. I think every balance sheet that we look at is leaner, meaner, fitter than it was 10 years ago. We wouldn't be too wrong to say that. I think companies have learned a lot over the last 10 years. I think the way they handled this downturn in terms of moving very fast to cut production as soon as they saw the signs of a slowdown was very different from the late 90s, where, if you remember, there was huge chalking up of the inventory and the stuffing of the inventory pipelines. So I think they've been much smarter. I think they have moved to cut costs very quickly. I think in general, companies, as far as strengthening their balance sheets over the last 10 years, we have seen a lot of that happening. So I think they've gone into this downturn from a much stronger position than they went into the last downturn. We are also seeing some very interesting trends, which I believe hold great hope for corporate India over the next 5 years. And that is what is happening to rural spending. If you look at the data, for the first time in the last 20 years, we have seen a situation where in the last 2 years, the growth in consumption in absolute rupee terms in rural India has been greater than urban India. And that has phenomenal implications for growth in the future. Why this has happened is, of course, well known. You have the employment generation schemes and the social sector schemes, which has contributed to rural sector incomes actually growing faster than inflation. You have the situation where a lot of the migrant laborers who came to the urban areas to work on construction projects remitted 72% of their earnings back to the rural areas. All this has really caused a huge boom in rural spending. And just look at the stats. You know, you have 1 in 2 rural households today owning a mobile phone. Even in states like Bihar and Jharkhand, you have 1 in 3 households owning a mobile phone. The penetration of scooters in rural India has doubled. The penetration of automobiles in rural India has doubled. And it's still at fairly low levels, which means that if we are able to sustain the rural boom by transferring the burden of rural job creation from the government to the private sector, which makes it more sustainable, I think there is great potential for growth of rural India in the future. And I think the trend of the last 2 years in rural spending is something which is not adequately focused on. And therein, I think, lies a lot of potential for corporate India for growth over the next 5 to 10 years.
Roopa, on that optimistic note, thanks a lot for joining us. Yes, rural consumption would be a positive, but can really corporate India take over the baton of job creation from the government? At the moment, it doesn't look like it is in that position. Thanks anyway for joining us. We'll take a break on that note. Markets really not doing much in the past half hour or so. It is 3 stocks bleeding, 3 stocks in the red for 1 stock in the green. Let's get a market expert. After this break, we will dip into a chat with the head of Motilal Oswal.